Hello, everyone, and happy Wednesday. We are halfway there. Oh, Wednesday. Wednesday today, and then we just have 3 more days, right, left over for this week. Anybody else looking forward to Friday? I am. We have some fun activities going on. But thank you again for joining us today for our session, Intro to Tax Advisory. Now, this is a session where I wanted to give you more of an insight and compare what tax advisory is to what tax compliance is, because tax compliance, we're very familiar year after year. April 15 is doomsday for us. And then if we extend, we have more deadlines coming up. So this is tax advisory. How can we shift from tax compliance, tax preparation, into more of a tax advisory service? And I think we first need to start with just defining what do we mean by tax advisory. With that, thank you for joining us today. If we have not met, I know we've had a few more new members join the community. Very pleased to meet you and welcome to our community. My name is Nadia Rodriguez. I am a CPA outside of Dallas, Texas, and I have been in business for over 15 years. Actually, I'm not too far from it being my 20-year anniversary, believe it or not. But I did leave the corporate world not too long ago to create my community online for tax professionals, which is a Nadia CPA Inner Circle. So thank you for joining that. Because in that community, I want to make sure that we have respect in our community and learning. Because I see ourselves as sticking with this together, because being together as a community, we can accomplish so much more in this tax profession by sharing our knowledge and helping each other out. I have also founded the Tax Training Academy, which is where I provide more in-depth master courses. And we have one rolling out right now, which is our S Corporation Master Course. And that one is a 10-week program. But education is my space. This is my passion. But I also run my tax advisory firm. I do prepare tax returns for some clients for compliance, but then I also have my advisory clients where we do prepare their return, but we model it more in meeting annually, once a year with them, or even quarterly, but more of a touch point with those type of clients that need the advisory services. So let's start with our session, because first we're going to just reminisce and talk about tax season. I know we're past 10/15, but tax season will never leave us, right? Even though the tax deadline is done, we still have clients calling us up or maybe bringing us their stuff even after the deadline. But we know that tax return compliance and the preparation of those tax returns, tax season traditionally, it's a reactive approach. When we're doing our tax returns for our clients, we're looking at their year that has just closed. We're seeing what income they made, what expenses they have, what deductions. We're hunting for those type of credits that they qualify. But we're looking backwards. We're looking into the past of how we can help them minimize that tax liability. Because what we're doing during our tax season is we're focusing on tax compliance. And we are limited in our client interaction. We really just see them for the tax compliance portion. We prepare the return. We might ask them several questions in the next days after they drop off their documents, or even during the interview when we first meet with them. We're asking them questions and we prepare their return. They sign it. We probably are giving them some advice of like, next year, you really need to call me, or you should have done XYZ to save on tax. And they sit there and they listen to us, and we're giving this advice for free. Now, do our clients implement that advice or come back to us later and say, I remember when you were telling me about some tax strategies to implement. Can you please help me on implementing those strategies? Most likely not. And most likely, we're repeating this cycle year after year, where all we're doing is taking a reactive look at their tax situation. And of course, this often causes stress. We know the tax season stress, right? Especially when we have our clients that we're just really helping them with the tax compliance. It's more of the frustration on our part, where we know they could have saved a lot more on their taxes if they had listened, if they had contacted us, if they had really consulted us before making that one big decision. When we look at tax advisory, if we compare tax season, tax compliance, to tax advisory. Tax advisory, we're looking into the future. We no longer look into the reactive approach of looking into past year where it has closed. We are having a proactive approach, and we are focusing on year-round tax planning. And we're not doing tax planning only in the fourth quarter. Instead, in an advisory approach, we're contacting our clients and meeting with them maybe once a quarter or even once a month. And we're working on the current year decisions so that we know how the tax return is going to look for us for next year. Because that's exactly how we're helping our clients with implementing tax strategies and advising them to really estimate the tax liability in advance. That helps us build stronger client relationships. Because what happens when we meet them once a year for their tax preparation, and if they have been our client year after year, it's usually a lot of time of us catching up with them. We haven't seen them in 12 months, and so we're catching up with our clients. And then, yes, we're preparing their tax return. But in catching up with our clients during that once a year meeting, we're learning about decisions that they're making or plans that they have for the future. What are their financial goals? And they start talking to us more like a friendship, but at the same time, we are listening to them as tax advisors. Because if they plan to purchase a new business, or maybe they plan to hire the kids, or they would like to help their kids start having their own financial stability, we know that they can do that if they have a business. Or if there's other things that they just have a W 2, are they getting ready for retirement? We start our gears start spinning as we're listening to their conversation, where maybe our client is just seeing it as catching up on life. We know that tax advisory, it does lead to more financial outcomes that are better for the client. Because if we look at the benefits for our clients when we offer tax advisory services, of course, number one, it minimizes their tax liability. Like I was saying with tax compliance, when we meet with our clients once a year, the year has closed. There's very little that we can do to minimize that tax liability and even minimize underpayment penalties because they wait until the end of the year to find out how much they owe. We can maximize the deductions and the credits for the client because we're reacting at the same time and we're doing a proactive approach. We're doing financial planning with them. Like I said, if our clients are talking about retirement, or even if they're not talking about retirement, we bring up that conversation because no matter what, one day they're going to retire. And so they need to start thinking about their retirement, even if they consider themselves too young or that it's never going to happen or it's too far in advance. We can reduce the audit risk because we know when it comes to Schedule C clients, especially, we're asking for them to fill out a spreadsheet of their list of income and then their categorized expenses. They probably are not really considering all the tax law behind which deductions they can actually take, which expenses are tax deductible, or even the number one issue that I do see is business mileage logs. Usually at tax time is when I'm asking about business mileage logs and the client never really tracked any of their miles and they're trying to go back in time into their calendar and spending a lot of time trying to figure out where they were, where they drove during the year. And I will tell you, most of the time, do they come to us with the most accurate numbers? Probably not. And that could raise an audit flag. If there ever is an audit, how are we going to help our clients prove those expenses? Because the burden of proof does lie on the taxpayer to prove the expenses. And where are the receipts? Where is the business mileage logs? The advisory benefit to the clients is that it does improve their financial understanding and decision making. Now, I can tell you this by first personal experience. With my husband, he's a photographer, self employed. It was me constantly reminding him of scanning the receipts, doing the business mileage logs. And it really is education about why they need to take the picture of the receipt or if they can afford the next equipment for their business. It's making them more understanding their financial decisions so that they can make those financial improvements and educating them on the financial situation of their business or of them personally. It does provide that peace of mind of financial security because I know lots of clients come to us during tax season with the anxiety where they bring us their stuff and they're just waiting and hoping for that refund without really having an idea if there's going to be a refund or if there's a tax balance due, especially with the new changes that are coming with the one big beautiful bill. The ITIN holders are the most impacted when it comes to those changes because this child tax credit, they no longer would qualify for a child tax credit. And are they prepared for that? Were they depending on a type of tax credit to reduce their tax liability or to even provide them of a refund for the tax that they have already paid in? It's that understanding and providing that peace of mind for our clients when it comes to offering them tax advisory services. Now, the benefits to us when we provide tax advisory services, because we go through the same, right? We go through that anxiety during tax season and the frustration of finding out so many things during the preparation of the tax return that we just wish our clients would have called us for and asked for our advice. But our benefits are also they increase our revenue and our profitability because not only are we charging once a year for a tax preparation return, but we are charging throughout the year. The more meetings that we have with our clients, are they monthly, are they quarterly, or maybe twice a year? We are charging for those meetings and we're charging for the advice, for the service of providing that advice to our clients, that expertise. It builds our relationship with our clients a lot stronger. Because again, we're not just seeing them once a year to catch up on life and doing the tax prep, but we really are sitting down with our clients and understanding what their financial goals are. It does reduce our workload, which is so important during tax season. We know those long hours during tax season. Tax advisory, instead, we're providing services throughout the year, and it's a more structured service of a more structured meeting versus the long hours all crammed into tax season. It does enhance our professional reputation and expertise because once we start talking to our clients about strategies and they are seeing the tax impact, the tax savings on strategies they're implementing, that is when the referrals start coming in because now they finally start feeling better and not as anxious about their tax situation. And of course, the work life balance. I think we're always chasing the work life balance as entrepreneurs. Having an advisory model for our business that we can offer our clients can bring us that work life balance because, again, these will be structured meetings and structured time that we can sit down and analyze tax returns and tax situations to help our clients and not feel under the pressure of meeting a tax deadline. So if we look at tax advisory, it's selling your expertise and not your time, not how long it takes you to prepare a tax return, but more about the time that you're investing in learning strategies and learning the tax law and keeping up with the tax law. That is your expertise that you're coming and you're bringing to the table with your client. Because if we compare traditional tax planning versus what tax advisory is, because we have offered tax planning. Tax planning, the traditional way, is that we meet and the year end in quarter four. Let me project your taxable income up to today, or let me look at your taxable income up to today, and then project what else you're going to bring in for the remaining month. At that point, I do the calculations. Here is your estimated tax liability. Are there many things that we can do towards the end of the year? There's not much time. We need more time for them to maybe, an example would be if they're trying to put solar panels on their residence. We know that solar panel companies take a while for us to pay them and for them to actually install that solar property on our roof. And so sometimes we need to make sure that we're meeting with our clients to let them know about this and they can schedule that service because we know our expertise knows that the law says that that solar panel has to be installed and functioning by December 31st in order for you to get a home property credit, the home residential energy credit. And so when we're talking about comparing traditional tax planning versus what tax advisory is, with tax planning, we start with tax prep. And what do you mean by that? We mean that we bring the tax return from last year, and then we kind of estimate and ask the questions in December, how's your income looking today compared to the prior year, prior to the return, the return that we filed, and what else can we add or delete from it? What other deductions can we find? Tax advisory, instead, you're starting with just understanding your client's goals, their financial goals, the retirement goals, the increasing the generational wealth. What is important to the client, and how can we help them achieve those financial goals? Then, when it comes to tax planning or compliance, right? We're talking about the cleanup and the reactive approach for just searching through those transactions for those tax deductions. Because if we ask the client, well, how much money that you spend on certain categories, they might not bring us the most accurate information. They really need our help to help them clean those books and look through all of those transactions to find what is deductible and what is not deductible for tax purposes. With tax advisory, instead, we're providing just strategies that are proactive strategies today that are going to help them either this year or in ongoing tax savings year after year. With traditional tax planning and compliance, like we said, it's an annual transaction. Once a year, prepare the return, and then we don't see them until the year after. With proactive, we are collaborating. We're going to get really close to our clients because we're collaborating with them throughout the year. And with traditional tax planning, we're selling our time. How long is it taking me to prepare a 1040 return with one W 2, with one Schedule C? We start seeing how many forms do we have to include in this tax return. And we estimate how much time it's going to take us to prepare the return. And that is what we bill our clients for. With tax advisory, you're selling your expertise. And you know you are an expert because when it comes to the tax return, you know how to prepare the return. But then you start identifying opportunities for them. And you start telling them those opportunities, like I said, for free. And most of the time, the clients are not really listening to us, or if they are, they're going to need your help to implement those strategies. Yes, you can mention the strategy of hiring your kids if you have a Schedule C business, but then they're going to ask you, how do I do that? What do I need to do? And sometimes we think we're just helping out the client by giving them just informal advice, but we really need to structure it into a business of a tax advisory model. So, the legislative approach today, like we know, our tax code keeps changing. We just had a major legislation pass on 4th of July of 2025, which was the One Big Beautiful Bill. And I know you have invested your time into learning about it, and there's more guidance that keeps on coming out. And so that time is our expertise. That's how we're becoming the experts in the field. And I know sometimes we get intimidated with the word expert because, again, reality, not all of us will know everything, but we do specialize on certain things. We can hammer down some certain tax situations and tax savings strategies, like hiring the kids, like opening a retirement account, having that contribution into a traditional IRA. And we become more experts the more questions that we're asking our client and understanding their goals, and then also communicating with our network, with the community that you are part of now. We start bouncing ideas off of each other because, again, we are becoming the experts. The traditional tax season, like I said, is stressful. Advisory is going to build our relationship stronger with our clients and in turn will bring us more referrals. So, step number one on moving towards an advisory model for our practice is start with just looking at your existing clients. Do you have Schedule C clients? Do you have those entity tax returns? Do you have clients that are really up to the plate of trying to increase their wealth and maybe they're a W 2 holder, but there's still opportunities for them? Are they contributing the max to their 401k? Do they even know about any benefits that their employer is currently offering? Do they have kids? What are the plans? Because we need to launch and we need to learn. Again, we need to identify those clients that are ideal for advisory services. Not every client will be ideal for advisory. Some of them maybe are not even interested in the idea, while others, we know that these are the type of clients that listen to us. We just have not structured our advice into an advisory model for them. And there's things that you can use like the ABC analysis method. And this is where we're going to spend some time, especially now in November, December, that hopefully we have a little bit more of that free time for investing into our business. Look at your client base and start segmenting your clients into different groups. And then you start grouping them into the A clients, which is the ideal clients that you enjoy working with, the ones that are listening to you, the ones that are eager to learn, and the ones where you see more opportunity for them to implement tax strategies. And then, of course, you have your B clients that maybe they're a good candidate for advisory. And then you have your C clients. Your C clients are those clients that really are not going to listen to you. You don't really enjoy working with them. Maybe you're just helping them with their tax prep return. And at the end of the day, they don't appreciate it either way. Those are your C clients that maybe you want to refer out or start disengaging so that you can create capacity in your firm to start dedicating more time to your A and your B clients, because tax advisory is going to be year round, and we are going to spread our time instead of just cramming it at tax season. We're going to spread it out throughout the year. So we might not have too much capacity left over to attend to the C clients. And then step number 3, focus just on 1 to 3 tax strategies. I already mentioned some, contributing to your traditional IRA account, contributing to a 401k account, retirement strategies. And so if we look at the next slide, this is where we have the most common strategies. Again, we don't want to get overwhelmed and think that there's going to be 30 strategies out there that we have to become very familiar and much of an expert of. Just 1 to 3, start small. Retirement plans, income shifting, like hiring the family, segmenting revenue streams. If we have clients that have a Schedule C or any type of small business owner and they're bringing in income from different revenues for that same business, can we segment some of those revenue streams into a different type of entity? Because maybe that type of entity, we can implement different strategies with it. Look at tax credits. Like I said, the one about the residential energy, home energy efficiency credits that expire at the end of the year. Are there any opportunities for clients that can implement that? Have they mentioned anything about home improvements or thinking about putting new windows? Well, now's the time before we get too close to the end of the year. And then other strategies, entity selection review. So if we have Schedule C clients, most of the time we always think going into an S corp because we want to save on the self-employment tax. But it might not be the best decision, or it might be the best decision for them. We have to spend our time in analyzing those entities and see which one would be the best. And depending on their tax saving strategies and the tax savings, that's what we would communicate to our clients. Employer benefit review. If they are an employer, are they offering any type of benefits for their employees? Maybe they want to attract more talent by offering another type of benefit for employees. Health and wellness advisory, which is self-employed health insurance or any kind of benefits. If they are an employer, are there any health benefits that they can offer that are not taxable to the employees? And who are the employees? Is it family members? That's something that we need to start learning more from our clients. So when we do provide advisory services, how do we price for this? Because I think that's the most uncomfortable conversation, at least for me, is trying to increase my prices and trying to really value my expertise. Because I think what we want to do, we're in this industry, we're helping people save and we're helping people comply with the tax law and the tax requirements. And so our nature is to be of service. And so when it comes to pricing and you start moving to an advisory model, we're going to make tax planning our primary service. We are not going to tell our clients we are offering advisory services to prepare your tax return. Instead, the language that we want to use is that we are providing tax advisory services, which include tax planning services. We shift over to a value pricing. We're going to look at the value that we are saving our clients. So we're going to have to start running some estimates with the clients that we identify in the A category. Are they a small business? What do they have going on? And how can we create a mock return with some different scenarios so that we can showcase how much tax savings we can bring to the table? And that's the value that we bring to them. We say, we can save you $10,000 for implementing some strategies. And in order for me to help you implement these strategies and bring you this savings is why I will offer you tax advisory services at this price. And so once the client starts seeing the return on investment and how much your fees are versus how much they're getting in return in tax savings, that really starts to change their mindset. Because value pricing is the value of the service. We're pricing those benefits that we're bringing for the client with the tax savings, with actual numbers. Instead of just saying, I can save you so much in taxes, we need to come with actual numbers. And when I mean actual, it's an estimate. And that's exactly what we will tell our clients. It's an estimated tax savings of X dollars. We're going to offer advisory services through bundled packages, bundled services, subscription based, which is really where the industry of tax professionals are moving towards. Instead of us just billing once a year for the tax preparation, we're going to have a continuous revenue stream because our clients are used to subscription based. They're paying for their Netflix every month, they're paying for Amazon subscriptions. They know that these subscriptions are part of the industry. And so we are going to move into that industry of subscription based model pricing, doing it monthly versus waiting to the compliance and billing them for a much larger amount, which sometimes, when they just see that number on the bill, most of the time they're not very happy. So when we offer bundle services, we have to be very clear on defining the scope of the services that we're offering for each package. Because when you see a bundled service, most of the times, and I'll show you an example, we're offering tier packages, option one, option two, or option three, and each of them have a different price. But we have to differentiate what you're getting with the first bundle, with the first package versus the most highest premier package so that they can see the value for each one. And they don't think that because they bought maybe the first bundle from you, the first subscription service from you, that you're going to offer that last subscription service, the premium package to them. We have to adopt that subscription based pricing where we charge a fixed amount, a recurring fee that can be either every month or it could be a quarterly charge. But what are we bringing to the table to offer our clients every quarter? It all depends on the package that we're putting together. And so we have to communicate with our clients. Our current clients, if we come to them today and tell them we're shifting, we're no longer running our tax preparation services for you because they are an ideal client for tax advisory. We can see the opportunities of tax savings. And so we're moving over to a value pricing, which includes a subscription model. And then this is where we present our proposal. Here in the next slide, this is a very high example of the type of bundles that I'm talking about, where you're going to put them in three different categories. For example, the first one is tax planning basics. The word already says basic, so we know it's the most economic pricing that we offer, $350 a month. And so what does that include? It only includes an annual tax planning meeting once, maybe in the fourth quarter, maybe mid-year, where we're helping them up to that point and telling them what advisory strategies we're offering. And it's going to also provide the year-end meeting. So it's really two, right? Two meetings for the first package. And we're going to include in that the tax preparation of their business return and their individual return. But it's going to cost them $350 a month for the contract of a year. Or client, between $500 and $800, we have advanced strategies where we're going to provide the business taxation services, individual services, and sorry, I think my stuff got cut off. But what this includes for the advanced strategies is more meeting quarterly because we can implement strategies at different times, or if we come to our very first meeting and talk about the strategy of hiring the kids. Our next quarterly meeting, have you implemented that? Do we need to help you implement? Does it provide the service of helping you draft those type of employment contracts or giving you templates so that you can look over the employment contracts and over the timesheet templates? Have you filled those out? And it's more like homework and holding these clients accountable. And honestly, the way I offer advisory services, sometimes our monthly meetings, I expect them to be more about value service and how can we look at what you've done so far for the month. Sometimes these meetings are used up as just, let's look at categorizing your expenses together. And when we do that, it just makes the client feel better. But we know that now I'm training them so that our next monthly meeting, they have done it themselves. And now we can look at the total estimated income and expenses so that I can analyze and say, how about this strategy? Or we offered you 4 different strategies at the beginning of the year. How are we looking? It's more of an implementation. And so the last one is the $1,200, which includes weekly or monthly support. Now, these are not my prices. This is something that I did pull off from a class that I taught, but an example of $1,200 a month. That it might seem like this is a lot, but are we providing this to a client that we see the tax savings of $30,000, where $1,200 a month is going to be worth the return on investment? Because tax advisory is moving from reactive compliance to proactive partnership. And it's about our mind shift change. We are very used to once a year. And so now we need to start thinking about doing this differently. And like I said, not for every client that you have with your business, but select those elite clients, those that can benefit the most. And the biggest achievement is to that we are now focusing not only on how to doing tax returns correctly, because that's how we started our career, is we wanted to make sure that the numbers were entered correctly and they flowed correctly to the tax return, because we wanted to make sure that those returns were accurately filed with the IRS, which is a great start. But now that we have more experience is when we can start shifting over to advisory. And again, not for every client, but we can start very small, maybe one or two clients if that's what we feel comfortable with. Because now it's going to happen where we don't need tax seasons under our belt, more than 10 or more than 20, no, for you to become a tax advisor. You just need to have a mind shift change. Because instead of us asking for the numbers from our clients, we want to ask them, what do they want to achieve? They have a business. Where do they see their business in 3 to 5 years? And these are questions that they have probably nobody has ever asked them. But now we're going to have to bring those questions, and they're going to have to set some time to really put some thought into those type of questions, especially those business owners, because we know we have to remind them you're in this business because you want to grow. You are an entrepreneur, and entrepreneurs are always in our mindset to keep growing. So sometimes we have to step away from the routine of our work and really take a reflective step forward into where we want our business to go. So instead of us looking for those deductions, ask what's changing for them personally on their business. Again, we're not just seeing if there's business meal deductions, but asking them more about the operations, more about the goals. Do they have family that want to be hired for the business? Have they even thought about that? Because instead of closing the return and moving on, instead we're going to ask them for if they want a mid-year checkup, or maybe a quarterly one, if that's what brings them more comfort in knowing their financial situation. So we need to start launching and learning. This is like, we can't start waiting for the perfect time to start launching our advisory practice. Like I said, pick one client and just start off with one client, even if you charge very minimal, but you start learning and you start getting comfortable with the type of advisory that you can start providing, and more of the touch points throughout the year, and how much of a benefit you're seeing that your client has when you're meeting with them throughout the year versus at the end of the year. And here are some myths: that you need to know everything before you start. You don't. Like I said, 1 to 3 tax strategies that you can think about and you can get really good about. That's all you need. Your clients won't pay for my advisory services. This is, again, one of the things that we're thinking about. It's going to hurt their wallet, or I've never charged this much, or I've never charged a monthly fee for my clients. Because when there was a survey done, 79% of taxpayers are willing to pay more if a service will result in improved financial outcomes. Again, if you're showing them in estimated tax saving dollars, how much they're saving and how much you can help them save, they are probably more willing to invest in your services. So if we structure our firm into advisory services, this is what I'm talking about. You have to create the capacity. Those C clients that you put in the C segment, either you refer them out or you just start dwindling down into maybe not providing services to them if you find yourself shifting more to a lot more advisory clients. But like I said, don't get overwhelmed. Start with just one client on offering advisory services, and always have the continuous learning, which is what you're doing. You're investing your time in learning and staying up with the law and learning about tax strategies. So really we need to start leveraging technology as well, because I'll show you a demo of the Intuit Tax Advisor product that is part of my tax software, ProConnect, and how sometimes it just cuts our time in half when it comes to providing advisory services and thinking for us, is what I call it. So if we look at an example, because now we're going to go through this together. We're going to think like an advisor, because my goal is for you to start not feeling overwhelmed, but instead more in the mindset check of yourself, of like, I am thinking like an advisor and I always have, and just not really stepped back and looked at my business model like that, because we're preparing those tax returns. So if we go through an example together, here are your facts. We have a taxpayer that is married, and they are filing joint. Jose, he's the breadwinner. He's an electrician, sole proprietor. Martha is a homemaker. She stays at home with the kids, takes care of the household, and they have two dependents, a 13-year-old and a 14-year-old. And in having conversations with them, we notice that they're talking to us about, oh, the kids need braces. We're going to have some braces that we have to pay for them coming forward. So you know that their medical expenses are going to be a little bit higher than what they have had in the past. So at that point, let's look at their tax return. Let's say they come to you with these facts and they're bringing you somebody's the return that somebody else prepared for them, or maybe they did it on their own. So here we have a client, like we said, Jose and Martha. We just kind of look through their tax return. And usually this is what I see when I assess for the very first time a tax return. Okay, they're married filing joint. That's good. They have the two dependents here, a daughter and a son. And I see no wage income, but it's expected because I should find line 8, other income from Schedule 1, line 10. And I can go to Schedule 1, line 10, but I already know it's a Schedule C, because in talking to them, he is an electrician, sole proprietor. His income, his revenue is pretty high, 180,000. And we have some advertising expenses, contract labor, and some other expenses of 5,000. In total, the profit of this electrician is $149,000. As I'm looking through this, is there anything that you can think about? And again, there's no wrong or wrong answer for this. It really is just ideas. If you can put in the chat what you're just thinking about for a Schedule C client that is a sole proprietor, because 149,000 we see produces self-employment tax of 21,000. And looking into his Schedule 1, I also see, okay, so here's the 149,000. And then Schedule 2, we have the self-employment tax. Schedule 1 on the second page, I do see that they have self-employed health insurance premiums that they're paying, 15,000. And looking into their Schedule A, I see the high medical expenses. And in having conversations with this client, we're assuming that they're telling us about, yes, high medical expenses. And they're expecting to have even higher with the braces that are coming through. And then they have, the taxes that they pay, real estate taxes, the interest that they pay, they get to itemize because it's greater than their standard deduction. And so if I start looking at this client, they're a Schedule C, they have two dependents, 13 and 14. To me, that sounds like a hiring age, right? They're teenagers that can work for the business. And so some of the ideas that I come up with, and I'm curious to see if anybody has any other ideas, but just thinking about what can this client do to save money? One, hire the kids. And I always like it when it's a taxpayer that's married and has the kids. And if the spouse doesn't work, can we hire the spouse as well? And there's a tax strategy for hiring your spouse when you're on a Schedule C. Yes, we're going to have to give Martha a W-2. We're going to have to pay FICA. But the benefit is that Martha can have a family health insurance plan. And so there is an option to offer a medical reimbursement plan when you're an employer, and you just have to make sure that it's offered to all of your employees, which all of the employees is going to be Martha and the kids. So it's not like we're going to have a brand new employee come into the table, because we can't discriminate. We have to offer the same benefit. But at this point, for year 1, let's not think about year 5 or 10. Because yes, how about if this electrician grows bigger and they get more employees on board? For now, let's just concentrate on 1 year savings. 1 year savings of where these medical expenses of 23,000 plus the health insurance premiums of the 15,000 plus the braces that are coming through can all be 100% deductible on their Schedule C as an employee benefit program. They no longer have to be limited by their Schedule A. And on Schedule A, we have the out of pocket expenses. And then, of course, the health insurance goes on Schedule 1. But 100% of out of pocket medical expenses and premiums can go on line 14 as a deduction. And then we have the vehicle use. Yeah, there's no vehicle use. And I have seen, I bet you have seen too, tax returns that come either self prepared where we know they're using their vehicle and they just didn't have a vehicle expense. Let's start tracking those miles. So that could be another strategy. And even if it's not, I don't want you to think, oh, this benefit program of the medical is a tax strategy, but this is line 9 is just a regular business expense. It's something of a missed opportunity that now you're bringing to the table, an opportunity to save. And so we're going to estimate. And I usually do like an estimate. I ask them, how often do you drive? Especially as an electrician. So I know they're driving from house to house, providing the services if they don't have a work truck. And so I estimate, let's just estimate maybe 7,000 of business miles. Again, we're just running an estimate. Once our client we offer this to our client as a savings of, we can save you a total of $15,000, but my services are going to be $1,200 a month. And so this makes just more of a difference of how they can visualize where their savings will come from. Home office. There is no home office. And in having conversations with clients, if you know that they're not renting a space in a shopping center, they're working from their home office. Even if they don't think about it like working from their home office because they're out in the field doing the electrical work, somebody has to come home and do some kind of timesheets, some kind of books, some kind of appointments. Maybe you're looking at your website. There is a space in your home that we can say it is home office. I have a client that has a 1-bedroom apartment, very tiny, and he's a consultant. So he's always driving to different oil field locations. But we have a home office. He has now purchased one of those dividers, the room dividers, and put a corner in his home, very small corner, but he has a desk and he has his laptop. And he took a picture. That is his home office. Even though if we have maybe 10, not even, maybe it's 2% of his entire living space as a home office. Because the best benefit that comes when you establish a home office is that your miles start counting as business miles as soon as you step out the door of your home office. Because if you don't have a home office, then they're just considered commuting miles, which are not deductible. The entity classification, yes. Let's run a scenario of having it into an S corporation. How much savings can that be, right? We have to consider the reasonable salary. And again, when we're doing the initial assessment, we're not really going deep into doing market research. How much do electricians get paid in the area? We're just going to pick a number, maybe $40,000 as a reasonable compensation. Because what we're providing to our clients, we're seeing an estimated savings is what we will bring with our advisory services. And we're not going to tell them, become an S corp, hire the kids, have a medical reimbursement plan, have a home office, because at that point we're giving our goodies, right? We're providing that type of advice for free. Instead, we're going to change it to terms that are very general. We can implement some income shifting strategies. We saw some opportunities where we find more savings on business expenses. And if they're insistent of like, well, what type of expenses, that's what I would need more time to really come up with your plan for advisory services. But I can save you an estimated of 10,000. But my services for me to help you implement it and give you the exact steps that we need to implement for your savings will come with the price. And so, yes, retirement contribution, yes. Things like this, there's so many strategies that we can look into. So now let's look into the demo, right? This is us just thinking and brainstorming together. Or even if you're looking at it on your own and you're brainstorming, let's see what technology can do for us, because there's other products out in the market that can analyze tax returns for us to provide us those types of strategies. Let's see. So, of course, this software, Intuit Tax Advisor, you have to have Intuit Pro Connect as your tax software. So it really isn't, it's included in the package. It's not free. It's part of it. You have to pay for it, pay for your tax software. But Intuit Tax Advisor is a feature here that if I click on it, I go to Intuit Tax Advisor, launch it, and we'll see what it populates. And what Intuit Tax Advisor, it analyzes the tax return. So if you click on here on create a plan, and there's a lot of training videos on how to do this. So here I know that I named my client Martha. Or circle. Okay, it is not. Maybe it's this one. Let me see if that's what, I don't know if it's not finding my client. It should find my client because I named it Reyes and I'm not finding the exact client. So let's try this one. And again, this is just one of my fake returns. It's not a real client return. So let's see what this happens. But basically what it says, I'm going to select their 2004 return. Oh, here we are. Martha. Okay, that's what I named it. And so here it tells you right off the bat, it found 13 strategies for you for a savings of 20,000. And so we can name our tax plan. I'm just going to name this, test right now. And we're going to start planning. Now, Intuit Tax Advisor, I know pulls up tax strategies. So opportunities like the home office and the vehicle, missed tax deductions might not come in as much. But let's look at what their interface looks like, which is what I want to demo with you today. You start off with the pre-line strategy. Here it's going to show you, right, we have no wages, which is what we know. We have 149,000 of the income. And then here the baseline is, how are we estimating anything? Maybe the client is telling us that their income is actually, their revenue is expected to either go up or down, because we're going to ask them, based on last year, how does your situation look different this year? Are you estimating, projecting about the same amount of income? If they have no idea, we are going to do that for them. We're going to project the same, just use the same amount. But here you can actually, if you do know that they're expecting more income, we can start increasing or modifying what the projected 2025 is. And so then you go into strategies. And here provides you what they call strategy cards. You see on the left-hand side, it already tells you S corporation election is one of the strategies that, yes, if we convert this client from a Schedule C to an S corporation, if I click on that, it gives you a little bit more of the strategy behind it. Here it tells you, what do you think the reasonable salary will be? Again, we're just estimating at this point, which is what you need to do when you're providing you're putting a tax plan together of what your advisory services will look like and how much savings you're bringing to the table for the client. So here it tells us right away, it's saving us $19,000 by becoming an S Corp. Other strategies that it provides, like I said, income shifting strategies. Again, we're not going to tell the client exactly the strategies they're going to implement until they have hired us for tax advisory services. So we have income shifting, we have the Augusta rule. And so the good thing about what I like about Intuit Tax Advisor is that it gives you more literature on this. If you click on hiring your kids, well, I want to get more familiar with that strategy. So it gives you all of the rules, the regulations, the limits for 2025, because we know the standard deduction, the son or the daughter would have to file their return, but they would only pay income tax on the amount of wages above their standard deduction. So it gives you more, I really like the knowledge base, the research, any consideration. It kind of gives you the formulas, materials that are going to go to your client, because when they actually hire us to do tax advisory, we're going to give them a report. And this is what I will show you, which is what I really like. Like, again, you can play around with this where you add strategies or you remove strategies. Again, just concentrate on 1 to 3 strategies on year one that you're providing advisory services. But if we look at the client report, remember, right now we said that the only strategy is S Corp, just to give you an example. But here it gives you a proposal, the proposal of what you're going to communicate with your client. And you can add your own branding to it. And if I scroll down, it gives them here an estimated that if they don't hire you, they don't implement any of your advice, they are possibly paying at 22,000 of tax. But if they do implement your advice, oh, there it is, they're actually going to get a refund. And that's a $19,000 of an estimated tax saving. And of course, the word estimated is key. And so there's a $19,000. This is your proposal, because all you're telling them is we're thinking you're going to have a $19,000 of a savings. That's what we're estimating for you. And so what's your next steps, client? And this is something that you can just do a mass email to, those A clients if you don't want to really call them on the phone, but instead provide this to them, because you're telling them what's the next plan. You can always modify this, click here to schedule a call with me. Yes, I'm ready to do advisory with you. But then when you're done and you've offered it and they've paid you and they've hired you to do advisory for them, we move on to the actual tax plan. This is the plan that we will deliver to our clients so that they can know exactly how they're going to save $19,000. And so here, of course, it's going to provide a disclaimer, which is what we need for legal reasons, where it says, hey, these strategies that I'm recommending, of course, are based on your what you've told me, the conversations we've had, and it's based on estimates. So it's more like, it covers ourselves by providing this to our clients. But here it talks about the strategies, for example, the S corporation. It gives the client in a type of language that they can understand of what S corp, what it means by it becoming an S corp. And so how do you get started? It gives them information too on how to get started. And this is something that I've seen many tax advisors in the field, is that this is all they sell. They only sell the tax plan. And this whole implementation, so like how to get started, is applying for the 2553 and actually becoming an S corporation. That's what they can sell as a service of implementation. But the tax plan themselves, they can say, I'm for $19,000 that you're saving, I'm going to sell you my secret book, my plan, my tax plan for, I don't know, $2,000. And you can take this plan with somebody else, with another tax preparer to help you, or I can help you implement it for a monthly maintenance fee and implementation fee. So it really is at your own discretion how you want to shape your advisory services to your clients. Do you want to include all of this $19,000 as a bundled package for this $19,000 of a savings? It's going to be 4 quarterly meetings at this much of an amount per quarter or monthly. It all depends how we want to do it, and we want to include the tax preparation in there. I think it's really important for us to, so that the clients can see, I'm still preparing your return, but instead we're doing this throughout the year so that we can act fast and be able to do these strategies and implement the strategies. But this, I will download this so you can more read into, and I'll add some more strategies. I'll add it to our resources so that you can read into and get a good feel of what Intuit Tax Advisor provides you with these strategies.